Nifty scales to a new all-time high of over 26,300, while the Sensex powers past 86,000 as the S&P 500 index in the US resumes its AI rally. Morgan Stanley's emerging markets strategist Jonathan Garner says India's valuation has turned attractive and he expects earnings growth to pick up next year.
In a likely resolution of a long-pending issue, Tata Power is likely to ink a supplementary power purchase agreement with the Gujarat government for its Mundra unit and restart its operations in December. This pact is likely to be used to ink power purchase agreements with other states as well.
Whirlpool of India sinks after its promoter sells nearly 11% equity after upsizing the offer from the initially indicated 7.5%. The sale results in the Indian arm ceasing to be a subsidiary as the parent stake slips to nearly 40%.
Axis Bank loan growth should continue to be better than the industry. MD and CEO Amitabh Chaudhary tells CNBC-TV18 that the bank is keen to merge Axis Max Insurance with Max Financial if rules change. He says he's watchful of MSME loans but doesn't see any cause for worry.
India winning the right to host the Commonwealth Games 2030 in Ahmedabad can spell nearly 15,000 crores in terms of development boom in the city area, going by past records. Infra, realty and hospitality players are likely to be the key beneficiaries. Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Patra and with me is Mangalam Malu. Well, what a day it is. We're sparkling for the markets. We're off the day's high, but nonetheless, we have touched that new all-time high for all of the indices, in fact, and the Nifty bank yesterday's trade itself. So today we do have the Nifty, which is just about come off those highs. So at around 26,250 odd is currently where the Nifty is at. The mid-cap index is seeing profit booking at the top, so slipped into the red. But nonetheless, we do have the advanced decline ratio, which is on the positive side. So let's see whether that sustains. But we do have a couple of heavyweights which are at fresh 52-week highs in today's trading session. So that includes Reliance Industries, Axis Bank, Hero Moto, to name a few, which are at the top of the list in terms of fresh 52-week highs.
Take that point, Ekta. And in fact, we just ticked that mark of a record high for this year. And, it's good that it's come after 14 months, though the broader market has a lot of catching up to do when it comes to earnings growth, when it comes to revenue growth, when it comes to FII flows, and perhaps some certainty on international trade, and which is why this reflection of a record high is absent in the broader markets today. In the advanced decline ratio as well, like you pointed out, now we have almost an even Steven sort of red and green lines coming in out there. And eventually, we will watch out for how the second half of trade also pans out, because we have the Sensex options expiry today that plays out. So we'll watch out for all those cues as we move along today's trading session. Kotak Mahindra Bank doing well, HUL fairly well bid, and a couple of these financials, Bajaj Finance, for instance, is at the top of the table when it comes to the gainers on the Nifty. But another stock which is doing well is Glenmark, surging on the back of receiving an establishment inspection report from the US FDA for its Monroe facility in the US. Ekta.
Well, definitely positive news which is coming for Glenmark. In fact, this particular Monroe facility has had a warning letter since June of 2023. So now they've received, it was inspected by the US FDA in June of 2025, where they were issued around 5 observations. And now they've received an establishment inspection report indicating a VAI, or a voluntary action indicated status, indicating that this particular facility is out of the woods and the company is going to start commercial production from Monroe again. The plant is expected to become more significant in terms of a contributor going forward, post these regulatory issues now being ironed out. So that's definitely a positive for Glenmark. In terms of the other, key point about about Monroe, Glenmark has made investments of around $100 million in the facility. So it'll be interesting to see what kind of contribution it has going forward in terms of the drugs which will be filed from this plant. But remember that Glenmark has been facing regulatory issues, for example, the import alert on the Badi facility, warning letter to the Goa facility, as well as the Indore facility. So this definitely does come as a positive, and hope that the others would probably see some light of day.
All right, we will monitor the situation as we move forward. The US FTA and pharmaceutical sector having a very fun relationship. Let's move on. Let's talk about Trans-Rail Lighting then, the very first management on the show. Joining us now, Randeep Narang, who's the MD and CEO of the company. Obviously, the discussion will be around the new order win that the company has made in Middle East, North Africa rather. They've said that they're on track for 22 to 25% growth in FY26 on the top line. Let's see where that goes. And strong execution order and timeline. Will that momentum continue or not? Thanks a lot, Mr. Narang, for joining in. A good order win that you've got, around 550 crore rupees. But in light of your overall book of, nearly 9,500 crores as an order inflow for this year, it's not moving the needle much. It's just about 5.5% of your targeted order inflow. What I'm curious to know about is the first half of this year, you've done a 61% jump in your revenue and a near 50% jump in your EBITDA. You're still maintaining this 22 to 25% sort of growth target for the full year. Why is that? Do you expect some slowdown in the second half? Or do you believe that you will outpace the guidance that you've given already, given where you are in the first half of this year?
So hi, thank you for having me here. So the actual revenue depends on the state and the quality of the project management focus. So some projects are into engineering approval stage, some are into execution stage. However, we had set a guidance of 23 to 25%, but we are confident that we'll cross 25% plus, and that's the change we're seeing now. Post monsoons, our execution is getting better and picking up faster. So we are confident that we will beat this guidance of 25%, definitely by a percentage point or two.
Okay. Well, Mr. Narang, if you could just give us a sense in terms of what kind of cumulative order inflow are you expecting in the second half of the year, and where exactly would it be from sector-wise?
Okay. So principally, we have around 15,000 odd crores of unexecuted order book and around 2,600 crores of L1. We have booked orders worth 3,700 crores this year so far, and a L1 of 2,000 odd crores, 2,600. So we are around 6,000 crores of fresh orders. We are looking at another 3 to 4,000 crores of new orders in the next 5 months. And we are on track for that. And our bidding pipeline is there. We're looking at bidding at least 30,000 crores of new orders in the next 4 to 5 months. So we're pretty much, our guidance stands stable and it is in line with what we promised.
All right. So you are on track for that 9,500 to 10,000 crore worth order inflows this year itself. What about the margins? You said it depends on the quality of the execution that you're doing, the quality of the client, etc. You have been guiding an 11.5 to 12% sort of margin range. First half of this year, you've managed to hold on to that 12% mark. Just the way you are going to outpace your guidance on revenue, will you do that on the margins as well?
I think 11.5 to 12% is the steady state we are looking at. Of course, there are some projects which are lower, some are higher. So we are looking at a balanced portfolio of margin management. We believe that 11.5 to 12 is a very stable margin profile, much better than our competitors. And we are therefore focusing to make sure that this happens. And we are pretty confident that we'll maintain it.
Okay. Well, Mr. Narang, you're confident in terms of your revenue as well as your margins. Just wanted to understand what you are doing when it comes to the international business, because you have 2 projects in Bangladesh, we do understand. Totally, I think it's around 30% of your total sales. Give us a sense in terms of the incremental order inflow, how much of it is coming from the international business, and are margins significantly different from, say, the domestic business?
So our current order book is around 60-40, 60 domestic and 40 international as we go along in terms of including the L1s. What we believe is that we will maintain that the India market is booming, the T&D industry is booming in India. And international also, there is a steady growth in Africa and other countries. So what we believe truly is that the margin profile has improved in India and international both. And therefore, we are in that good zone. You also know that we are well diversified backward. We are into towers, conductors, tower testing, making monopoles. So we have a very strong cost structure, execution skills, and diversified backward integration. So that helps us to maintain a margin profile.
Right. Speaking about the margin profile itself, I just wanted your thoughts on two things in particular. One, in the second quarter, there was a big jump in your subcontracting expenses. If you could tell us what explains that and where is that likely to settle as a percentage of revenue. And the second part is the brownfield expansion, which is coming on track in the third quarter. How much will that support your operational performance, given that it will be more backward integration in nature than revenue recognition?
Yeah, so that's a good question. I'll answer the second question first. So the backward integration on our brownfield projects is on track and will be in stream by December, that is next month. Our new factory, which is for towers, a greenfield project, will be operational. It's already started slowly moving into the production planning, production startup phase, and by January that will also come into being. A conductor factory will happen by June, July of next year. So we're very much in line with our projections for supporting our revenue growth through our backward integration of factories of towers and conductors. Now, on your assets part, what you mentioned, we are particularly looking at higher execution happening. And as revenue is growing, there is also a certain amount of retention cost. There's a certain amount of inventory buildup, which is temporary and which will ease off by March. So we already focused on that, and that will be closed and controlled by March.
Okay. All right, Mr. Narang, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Transrail Lighting. They have increased their guidance in terms of the revenue. They're expecting around 26 to 27% growth versus 22 to 25% that they anticipated earlier. And they are also expecting the margins to be stable at around 11.5%. We'll take a short break, but up next, we'll focus on the markets. Pankaj Tibriwala of Ikigai Asset Managers will join in to discuss the markets. Stay tuned.
Welcome back. The Nifty and the Sensex have hit a record high. The Nifty Bank as well, as has the mid-cap index. But are your portfolios feeling that or not? Let's get in our market master today. We do have with us Pankaj Tibriwal of Ikigai, founder and CIO at Ikigai Asset Manager. Pankaj, always a pleasure speaking with you. It's one of those, ticking the box sort of record highs where, yes, the markets hit that, but, portfolios aren't feeling the same. The street is worried about earnings returning. The street is worried about growth returning. The street is worried about FIIs returning. And it's worried a little about the uncertainty around trade as well. Amidst all of this, where do you think one should actually invest to make their portfolios feel like they're at a record high?
Good afternoon. I think your observation is absolutely right. So let's look at the data. So if you look at Nifty, which is almost at record highs, but if you look at the median constituent of Nifty, it's down by about 8%. Similarly, if you look at the small cap index, it's about 8% away from its all-time high. But the median constituent of small cap index is on an average down by 21%. And if you look at the BSE 500, the median constituent is down by about 18%. So very few handful stocks have taken the index higher, but the breadth of the market has been extremely narrow and poor. And we have seen this in the previous cycles also, that sometimes the index is driven by few names and few stocks, but the breadth has been extremely poor. Now, what can change this? I think finally stocks are slave of earnings and flows. And when we look at earnings this quarter, I think it was a little better than expected. After many quarters, we saw an upgrade cycle rather than a downgrade cycle on an aggregate basis. And let's, Mangalam, decode the entire earnings space. So 500 companies reported earnings growth of 15%. And if I bifurcate into BFSI and non-BFSI, BFSI is about 92 companies, earnings growth of 7%. And non-BFSI, which is bulk of 408 companies, is about 21% earnings growth. Now look at the market cap earnings growth. The large caps delivered 9%, mid caps delivered 31%, and small caps after a long time delivered 35%. But a caveat there is that both in mid and small caps, a decent portion is driven by oil and gas companies. For example, in mid cap, it was HPCL. In small caps, it was Cochin Refinery, maybe MRPL and stuff like that, where we need to adjust for that. But even after adjusting, the earnings growth was quite healthy for mid and small cap space. So I think once there is more consistency for a couple of quarters, I think you could see the breadth also reviving back. But obviously, as you rightly said, market all-time highs, but portfolio of individual investors not showing that.
Okay. But Pankaj, if you had to just narrow down on maybe a couple of pockets that you like within the market at this point, within the mid-cap space especially, what would they be?
So one space where we have been positive is the auto ancillary space. I think the auto cycle after a long time seems to be reviving back. The ground feedback continues to be positive. Even after the festive season, the momentum on four-wheeler, two-wheeler, and even commercial vehicles have started to be quite positive. That's the feedback we are getting from the ground. And after a long time, auto ancillary seems to be in a sweet spot in the mid and small cap space, and especially the companies which are also pivoting themselves away from auto to non-auto. And there are many companies where the next 3-year outlook on non-auto, which is defense, aerospace, semiconductors, and maybe industrials, is shaping up to be very good because a lot of global suppliers are looking for manufacturing on precision engineering, and many of them fit the bill. So that's a space which we like. The second is the NBFC and the banking space. I think the NIM compression and the worst asset quality is behind us, and that's clearly being shown in large cap, mid cap banks right now. Earnings growth from here on should be quite strong for the banking space overall. And if you look at the lending, which is non-NBFC as well. But in non-NBFC, we have seen a sharp run-up already happen. So we need to be careful on valuations. But that's a space which can show you strong earnings growth. The third space where it's a contrarian call, I think, is metals and mining. I think you have seen a very strong quarter last quarter. But going forward also, I think that space globally is looking to be quite good. And you have seen a very sharp jump in copper, followed by zinc and other metals. I think that should reflect in the overall stock prices as you move ahead over the next few quarters.
All right,
So
auto ancillaries. Got that. Auto ancillaries, you like NBFCs, banks rather, and also the metal space, which is a contra call. So we'll take these on board and wish that earnings do actually come back with a vengeance in the second half of this year, and then perhaps get you more on the consumption space and maybe a word on the IPO space as well, as more IPOs. Nearly 30,000 crore worth paper is likely to be supplied in December. With that, we'll take a short break, and as we do that, a quick programming note. Thank you, Pankaj, for joining in. If you're looking for big bets and market themes for 2026 as we move towards the start of the new year, CNBC-TV18 Access gives you direct access, as the name suggests, to White Oak Capital AMC's Ashish Somaya and Prashant Kemkar as they share their winning market themes and actionable investment strategies. You can ask your questions live on 28th of November, that's tomorrow, at 1:30 p.m. Become a member today on the CNBC TV18 app or log on to cnbctv18.com/access/plans. You're watching us here on Halftime Report on CNBC-TV18 from the FNO desk. I'm just looking at a couple of trends at midday for the market. Yes, we hit a record high on the Nifty, the Sensex, and even the Nifty Bank in today's trading session. The mid-cap index was yesterday, though we're off those highs right now. From today's high, we've given up around 70-80 points on the frontline index, which is usually par for the course. The only thing that we have to watch out for now is some profit taking, which is taking place in the broader end of the market, which is visible in the mid-cap index not doing too well, currently lower by almost 90 points. And the advanced decline also comes up for you with a line which was far outnumbering the red one. The green line has now come closer. In fact, the red line has moved above the green line. So 1450 stocks which are declining for about 1400 stocks which are advancing. So the second half becomes extremely crucial. And the other thing is that the top contributors on the Nifty are just on the Nifty Bank. In fact, 3 of them belong to the Nifty Bank itself. So the market has to really broaden out, and Reliance has actually been the top dragger on the way down. Now, as we look at the market as it progresses, the important levels to watch out for, the 26,300 call writers are fairly active at 83 rupees, telling you that the market may face some sort of congestion or supply at around 26,350 to 26,400 thereabouts. But where equal vociferous writing is seen in the 26,300 put and the 26,200 put. So the 26,300 put comes up for you, premium of close to around 150 rupees, and the premium is actually down, which tells you that there has been a lot of writing which has taken place out there. So around 26,150, 26,200, there is support, and the 26,200 put as well for a premium of 100 rupees, telling you that there is support around 26,100. So 26,100 to 26,150 is the support, whereas on the way up, 26,350 to 26,400 is the supply. That's basically the sum and substance of the options data. Just a couple of factors we need to watch out for. The Nifty put call ratio from levels of 1.41 yesterday, which was at an overheated zone, came down to 1.38 earlier and now to 1.25. Around 1.2 is where the overheated zone ends. So we'll have to watch out for more moderation out there. And the second part is the Sensex weekly options expiry today as well. So could we see some impact of that on the Nifty in the last hour or not is something that we will be tracking. One stock I'm looking at, Samman Capital, was in FNO ban all of the last series. Does it get into ban again on day 1, day 2 of the December series or not is something we'll be tracking.
Okay, all right, Manglam. Thanks very much for that. So that's on the entire FNO space at this point in time. We'll take a short break, but up next, Manisha Gupta will be with us. She has with her a guest, Arun Raste, joining in to discuss the commodity space. Stay tuned.
Welcome back. Joining us on the show now is Arun Raste, he's MD and CEO at NCDEX. Mr. Raste, hi, thank you so much for joining in, and congratulations are in order because 770 crores is what you've raised as a preferential share issue, and you also are going on for the equity and derivative market there. What we do also understand is that it is the cash segment that you would be starting first on. Why do not you update our viewers with all of that?
Thank you, Manisha. Good noon. So, as you mentioned, we did raise about 770 odd crores from both domestic and international investors. We did a fresh round of equity, about 40 odd %. We will primarily use it for the equity and equity derivative segment. We did get SEBI approval a few months ago for starting our equity and equity derivative segment. So, in terms of the process, what we will do is we will start the equities first, and then we'll go for equities. But before that, there is one more addition, which probably you haven't heard about. We also intend to start a mutual fund platform, which is probably the first to go online, because that is not linked to the trading and surveillance system. So we can have a separate platform, and through which we can do the mutual fund distribution. So that will be our first offering. And that should be early in the next financial year, very early, possibly the beginning of the financial year itself, that we'll start it. And then later, as our systems and things in place, we will go for equity. And then after that, we'll go for equity derivatives. So in terms of, if you're looking at calendar, probably next calendar year and latest by next financial year, all the three should be up and running.
Mr. Raste, the other thing that we also have been hearing about is you acquiring a 20% stake in the Sri Lanka commodity and financial derivative markets. What is that about?
No, so this is all subject to regulations, both in Sri Lanka and India. What we have agreed with the Colombo Stock Exchanges, if they get approval to set up equivalent of a NCDX in Sri Lanka, we will be picking up stake in that. But that will be subject to regulatory authorities in Sri Lanka, SEBI approvals in India, as also DA or MEA as approvals required. Subject to approvals, we will be taking that. So what we have agreed with Colombo Stock Exchanges, they don't have derivatives at the moment in Sri Lanka, either financial nor commodity. So this new exchange, which might come up, will be dealing with both commodities as well as financial derivatives. And what we have agreed is we will be operating that for some time. We will be providing expertise, we will be providing them manpower in the initial stage, train their people, and also pick some stakes. So put together for our efforts and whatever we are putting money we are putting in, we will get about 20% in this new exchange. And that will be possibly subject to regulatory approvals. It should start sometime next year or a year after that.
Mr. Rasta, just taking a step back, and as you mentioned that the first thing that will go live is your launch of mutual fund distribution platform. We do also understand is that it will function independently when it comes to the exchange's main trading and settlement system. So would you say the time that you're talking about, the timeline that you're talking about, is the timeline that you would require to set up operations and technology, etc.?
Exactly. So if you're setting up an exchange or if you're setting up a platform, there are three requirements. One is the technology part of it, one is the human beings, the people who will run it, and third is the market participants. So we are working on all the three fronts. We intend to hire something like say 100 to 150 people over the next 12 months to take care of all the three functions. As I speak, my team is at the moment speaking to somebody who is a technology provider for the mutual fund platform technology. And as far as the systems for the equity part is concerned, we have already floated the RFP and hopefully we should close it by end of next month.
Mr. Rasta, what are the plans looking like when it comes to equity and derivatives therein? Because you have BSE and NSE standing up as tall competition for you.
See, competition is the game, but I will just put some numbers in front of you. So I'll start with mutual funds. If you're looking at mutual funds, if you're looking at say 15 years ago, what was the number of people who were investing in mutual funds? It was just about 50 odd lakhs. Today it is 5 crore unique accounts. Right? So compounded growth or last 12 or 13 years, we have grown almost 20 times. And this growth will continue. So I was looking at some of the developed markets, maybe US or UK. 50% of the population is invested either through direct equities or mutual funds in those markets. If you look at that, compare that with India, it is just about 15%, 14 odd percent. So the scope is humongous, 3 times bigger than where we are right now. If you look at equities, just last 5 years, if you look at data, year on year, every year you're adding about 2 crore people. Now, even with this, if you look at mutual fund growth, see the biggest growth now coming into the mutual fund space is not from the top 30 cities. It is coming from cities. And that is the place where NCDX has big roots. So thanks to our agri-commodity background, we are present in more places than the existing players. So definitely the population in rural areas which has not derived benefit of the growth in capital markets, possibly we will give them the opportunity.
Yeah.
Look at it from this perspective. I get a woman who is investing about 250 rupees in SIP every month, who is a customer of ours. We have about 12 lakh customers, farmers associated with us. Just 250 rupees a month if they start investing in SIP. My mutual fund portfolio will just fly from day one, right? So we will be looking at new markets, newer channels. Definitely there is space for 2 or 3 exchanges more in a country like India. Because if you look at a country like US, there are some 12 or 13 exchanges. China has 3 or 4 major exchanges. India has just 2. So there is enough space for more exchanges to come in. I don't see the big players will be affected by our entry because our target group is different and the pie is growing. Pie is growing exponentially. So there is space for everybody. We'll find our niche.
Oh, yes. Apart from BSE and NSE, now NCDX as well coming in with equity and derivatives foray. And of course, the mutual fund platform could start in much, much earlier.
Okay. All right, Manisha. Thanks very much for taking us through that conversation. We need to take a short break. But up next, stay tuned for the conversation that we have lined up. SMS Pharma, that stock was up around 15% in yesterday's trading session. We'll be talking to the management on the other side. Stay tuned. Welcome back. Well, giving up a little bit of its gains for the Nifty. So 26,247 is currently where it's at. We're seeing profit booking coming into specific stocks such as Eicher Motors, which is at the low point of the day, down around 2.6%. Remember, it's been an outperformer this year, but seeing some amount of profits being taken off. But nonetheless, let's talk about one particular company which really was one of the broader market gainers yesterday. SMS Pharma is the next management on the show. The reason the stock is in focus is because the FDA has approved a reformulated version of the acid reflux, very popular acid reflux drug, ranitidine, or popularly branded by some companies as Rantac as well, from its associate company VKT Pharma. So to talk more about this, we have with us Vamsi Krishna Potturi, who is the Executive Director of SMS Pharma, joining in. Vamsi, hi. Thank you very much for taking the time out. So you've received approval to manufacture the API of the reformulated ranitidine. Is that correct?
No, actually, we've received the approval to manufacture the finished dosage of the product, which is the tablets. And along with that, the API, which goes into the formulation. Yeah.
So you'll be manufacturing the API as well as the finished dosage.
That's right.
All right. Just give us a sense in terms of how exactly this drug is reformulated, just to, apprise our viewers. This particular drug was withdrawn from the US markets because of fears of it having a carcinogen NDMA present in it. So that's the reason why it was, it stopped being sold in the US markets, but now it's reintroduced. So just give us a sense in terms of what the difference is, and do you expect as much of a pickup in the US markets as there was earlier?
So coming back to so FDA has banned this product 5 years back, citing the reasons of NDMA for carcinogenic. But now we've liaised with the agency, we've complied with all their strict regulations, and now we've delivered the product that is very good in terms of controlling this NDMA throughout the shelf life of the product. And now the agency has given approval for us to relaunch the product. It's been a 6-year wait, and finally, after undergoing severe at different conditions, we've reformulated the product at different extreme conditions. We've tested the product, and when found okay, when we submitted all this data to the agency, I think finally we've received an approval.
So what does this mean?
Coming back to your point with respect to the market share, see, before the product was taken off, it was approximately around 400 million tablets per annum was the market share on this product. I mean, it was a 5-year lag because there's no other ranitidine in the market, right from the innovator to no generic players in the market since last 5 years. So definitely this market share has moved on to other products, but yes, it will definitely come back, but we have to wait and watch. It's a slow growth, but we have to try and bring some market share back.
So from an SMS Pharma standpoint, that's the question, right? How much do you expect this to contribute to your revenues once you start supplying it, and what is the likely scale up going to be from here on?
Correct. So with respect, we will be starting slow, obviously, because it takes time to build the brand and time to get the trust of the customers back. Again, we would like to re-emphasize that the product that we've recreated, the reformulated ranitidine, is very safe, and it's much lower than the guidelines requested for the NDMA at various stress conditions as well. So this is a very strong product, and it will take time for the customers to, get over this fact, but we know they'll come to terms with this.
Okay. What's the competition pipeline like for ranitidine in the US markets in the foreseeable future? I know you currently have the strongest market, you're the only player, but what's the pipeline like? Who are the other filers?
So right now, we are the only vertical integrated player on this product where we do the API and the formulation. So definitely, maybe it'll easily take our competitors at least 2 to 3 years because, they have to go through the same rigorous process that we went through of redeveloping this product. But yeah, if anyone enters, it'll probably be 2 or 3 players is my guess.
Okay. What I'm trying to understand, Vamsi, is basically whether you're expecting that kind of market to come back for ranitidine. Because if you see globally as well, because of the issues that had taken place 5 years ago, though the other countries had not, withdrawn the product, there was a shift to other acid reflux drugs simply because of the fear of NDMA in ranitidine. So do you think that has ranitidine in other markets actually declined over the years, and hence that gives you an assessment in terms of what it would be like in the US?
No, I think it's just about the fear of, having this carcinogenic impurity. So now a strong regulatory agency like the FDA endorsing this product, I think will definitely give a lot of relief to few other countries where this product, we will definitely see ranitidine picking up in the next few months, actually, as we speak. In various other countries. And again, as you rightly said, it's very difficult to get back that entire market that we lost, but it's a slow process. It's a slow process that, we can start, and probably we'll get there someday, but it's definitely a slow process.
Let's talk beyond ranitidine as well. You have given us a growth target of 20% in FY26 with 20% margins as well. Halfway mark, you are pretty much on track to achieve that. Just a word on ibuprofen. You are planning to scale it up from 450 tons per month to about 1,000. How much would that mean in terms of incremental revenue for you, and by when?
So when we hit 1,000 tons per month, so that will probably contribute close to 600, 650 crores of top line revenue for SMS.
And
just on ibuprofen, isn't it already quite a widely penetrated market?
Yes, it is a widely penetrated market. We are the latest entrants on this product, but we were able to get good market share across the world. In US, we have almost 60% market share. In Europe, we have big customers lined up. So we are getting market share month by month. We are going incrementally month by month.
all right, we take that point. Thank you so much for joining in. And just missed this point on by when will it turn to 1,000 per month?
So it will probably be from April. We will complete the project by April. So yes, from April on, it will be 1,000 tons per month.
Vamsi, always a pleasure speaking with you. With that, we'll take a short break, come back, get you more of the markets and a lot of stock-specific action. The markets actually picked pace once again. The mid-cap index back in the green. Stay with us. Welcome back. There's been some recovery from the lows. The mid-cap index just about moved into the green, now flitting between the flat line. A couple of these stocks belonging to the auto space in particular doing extremely well. Ashok Leyland was fairly well bid all of yesterday and now continues its up move up around 9% for this week with a 6% gain coming in right now itself, a big surge. And looking at Ashok Leyland, Escorts Kubota as well, which is in a similar segment, doing a catch-up. So that stock is up around 2.5%, closer to 3% as we speak. And Pankaj Tibrewala just spoke about some of these auto ancillaries doing well. So Samvardhana Motherson, for instance, has moved higher too. What we'll do is take your leave on this edition of Halftime Report on that note and take the market action forward with Business Lunch after this short break. Thank you so much for watching.